The digital payments landscape is rapidly evolving, as evidenced by Paysafe's growth into a comprehensive global provider of end-to-end payment solutions. From the source document, we can see that the industry is shifting towards integrated payment platforms that combine traditional payment processing with digital wallets, alternative payment methods, and specialized vertical solutions. Paysafe's market position illustrates the following. Integrated payment platforms offering full spectrum solutions from credit and debit processing to digital wallets and eCash, support for over 40 currencies and over 14 languages, a network spanning from over 120 countries with over 18 million active users, specialized focus on high growth entertainment verticals including iGaming, travel, streaming and video gaming, retail and hospitality, and digital assets. The due diligence process for evaluating Paysafe is particularly critical given the complex regulatory environment across multiple jurisdictions, sophisticated technology infrastructure requiring integration assessment, diverse business segments including digital wallets and merchant solutions. Paysafe Limited is currently being traded on the New York Stock Exchange under the ticker PSFE. Its industry is under online payments. It was founded in 1996 and went public in 2021. It is headquartered in London, England. The chairman is Dan Henson, CEO is Bruce Lothers, and CFO is John Crawford. The proposed acquisition of Paysafe by Visa represents a strategic opportunity to expand into high-growth digital payment verticals and enhance alternative payment capabilities. Paysafe serves over 18 million active users and 250 SMBs across 120 countries, with particularly strong presence in iGaming, digital assets, and eCash solutions. Paysafe has shown steady revenue growth over the last few years. This growth has been driven through their merchant solutions and digital wallet segments. While 2020 figures are difficult to pin down due to the company not going public until 2021, the company's revenue has steadily increased from 2021 to 2024. Paysafe has been connecting businesses and customers through payment solutions including digital wallets like Skrill and Nettler, payment processing, and acquiring services. Paysafe services millions of users globally and focuses on expanding its products and services. Paysafe's operating expenses vary by year, but as the company grows, we can see an increase in their operating expenses as shown in 2024. If you look at a breakdown of operating expenses, we can usually assume things like research and development, sales and marketing, and general and administrative responsibilities will contribute to a company's overall operating expenses. Paysafe's revenue growth as a percentage has varied throughout the years as well. A positive growth, like as we see from 2022 to 2023, indicates that Paysafe's revenue is increasing, which means that a company is selling more services, expanding into new markets, or increasing prices. Negative growth, as seen from 2021 to 2022 and from 2023 to 2024, means that revenue is declining, which could be due to loss of market shares, a decrease in demand for goods or services sold, and economic downturns. Operating efficiency generally tells us how much it costs Paysafe to generate each dollar of revenue. Typically, a higher operating efficiency percentage, like shown in 2021 and 2022, means that the company is doing a better job of controlling its expenses. Operating efficiencies can vary across industries, since some industries have generally higher operating expenses than others.
Provides a breakdown of the company's revenue across its main business segments: digital wallets, eCash solutions, merchant solutions, and integrated processing, over the specified time frame of 4 years. Each bar represents a segment's contributions, while the line across the top represents total revenue. Notably, the digital wallets and merchant solutions segment appear to be the key drivers of growth, with eCash solutions and integrated processing also contributing steadily. This balanced revenue distribution can help mitigate risk by avoiding over-reliance on a single product. Paysafe's earnings before interest, taxes, depreciation, and amortization to interest expense ratio provides data on Paysafe's ability to cover its interest obligations with its operational earnings. A higher ratio demonstrates that the company has a strong financial position, which means Paysafe generates sufficient earnings to meet its interest payments. A lower ratio, on the other hand, could be an indicator a company can't manage its own debts. Has had a stock price increase of 40.67% over the last 52 weeks. This chart illustrates the company's equity performance over the past year, highlighting both short-term fluctuations and long-term trends in the stock price. While short-term volatility is expected, the overall upward trajectory indicates that investors remain cautiously optimistic about the company's future growth prospects. Slide illustrates the company's price-to-book value, or PB ratio, offering insight into how investors value the company's net assets. The price-to-book value is 1.332, suggesting that the market values the company's assets at a premium compared to their book value. This indicates that the market is willing to pay a premium for Paysafe's assets, suggesting a positive investor sentiment and high expectations for future growth. Delves into liquidity ratios to assess Paysafe's ability to meet short-term financial obligations using its current assets. The focus here is on understanding how effectively the company manages its working capital and maintains cash flow, even during challenging economic conditions. A robust liquidity position, as depicted on this slide, is a positive indicator of a company's operational flexibility and its capacity to navigate unforeseen expenses or market downturns without compromising its core business operations. Here, the return on invested capital is explored as a key measure of how efficiently the company employs its capital to generate profits. This slide highlights Paysafe's effectiveness in converting investment into tangible returns, providing insight into operational performance and competitive advantage. A high return on invested capital seen here not only underscores efficient capital allocation, but also reinforces investor confidence in the company's ability to sustain long-term growth and profitability. Evaluates the enterprise value to earnings before interest, taxes, and amortization ratio to provide a comparative measure of the company's valuation relative to its operational earnings. By analyzing this metric, we can determine Paysafe is attractively valued in the context of industry peers. Displays Paysafe's price to next 12 months earnings per share, showing the range, average, and closing levels over time. Notice the peaks in early 2021 and 2023 followed by a downward trend, suggesting shifting investor sentiment, potentially influenced by earnings revisions, overall market volatility, or company-specific developments. This variance between high and low values also reflects the uncertainty in forecasting during certain periods.
Paysafe has a beta of 1.90. This indicates more volatility than the average market, and the swing of prices is riskier. Uncertainty can be due to it being a new and non-traditional method. This is a new technology that does have a lot of potential. Paysafe Sharpe ratio for the past year is 0.71. It has a positive risk-adjusted return, and it has moderate performance. A higher Sharpe ratio generally indicates a better investment, meaning more return for the level of risk you are taking. From the figure, you can see a competitive comparison between Paysafe Limited and different competitors. You can see that Paysafe is keeping up with the major competitors in the industry. Customers want this type of feature because of secure processing, safe online transactions, increased use of contactless payments, and convenient and efficient method of payment processing. The type of customers that Paysafe attracts is the general consumer, businesses, and the underbanked population throughout the US. Banks don't typically want similar customers because of non-traditional banking methods. Banks assume customers won't use their credit cards to utilize their credit limits. They have a higher risk of transactions and can reach a lot of tapped revenue. Banks can use this solution to target and familiarize customers with products provided by Paysafe, reduces the need for in-person banking or human interaction. Digital targeting can track customers via ads versus advertising new products in stores. This leads to a new customer base. Paysafe's integration capabilities are robust, with a single API and proprietary gateway that enables seamless integration with close to 260 alternative payment methods and approximately 150 integrated software vendor integrations. Paysafe has developed significant specialized infrastructure, including regulatory licenses, compliance frameworks, and deep vertical expertise that would take considerable time and resources to replicate. Paysafe possesses unique assets including specialized iGaming expertise, proprietary digital wallet solutions, and an eCash network with over 1 million locations across 50 plus countries. Banks can leverage Paysafe's specialized capabilities in digital commerce, alternative payments, and vertical specific solutions to enhance their existing payment infrastructure. Paysafe serves 18 million active users and 250,000 small to medium-sized businesses across multiple revenue streams including digital wallets, eCash, and merchant solutions. Paysafe demonstrates sustainability through established infrastructure, regulatory compliance, and strong positions in growing markets like iGaming and digital payments. The Paysafe Limited business model canvas presents the layout of the company through different structures of its operation. Some of the key partners include casinos, gaming companies, retail stores, and crypto. The main activities for the company include secure transactions, the ability to store funds, automated support, and international transactions. The various resources the company provides for customers is being able to keep funds in a digital wallet and have the ability to use your US funds in the EU, which came about from a partnership with Visa in 2019. Some of the values include fraud protection, faster transactions, and a vast underbanked population allows for a potential to gain more customers. Paysafe offers personalized customer service, the ability to get access to financial services if the customer is in a remote area, and the trust gained by the company's advanced fraud protection. Paysafe is channeled through social media platforms, it can be utilized in ATMs, and it can be marketed on various client platforms. The different customers include small to medium businesses, online gaming sites, and the underbanked population, as well as gambling sites. The main costs associated with the business includes the licensing fees, the marketing, daily overhead, and improving technology. The revenue streams include the transaction fees, credit cards in retail stores, ATM fees, and various subscription levels.
The Paysafe Limited Financial Feasibility Canvas offers a breakdown of the financial objectives of the company. Paysafe Limited is well positioned in the current payment sector, and they also have the potential to gain access to the underbanked population sector. The capital investment of the company includes cybersecurity infrastructure, software development, and working capital. The assumption is that digital wallet services will reach $7.6 trillion by 2027. Automated services to cut down on labor costs are important for the implementation. Paysafe has been generating positive free cash flow and is well positioned to take advantage of that demand. The capital expenditures need to continue to be used toward upgrading technology. One of the strategic rationale for the acquisition by Visa of Paysafe is the strategic value creation. Paysafe has vertical expertise, noted by their leadership in iGaming with over 1,500 operators, their digital asset capabilities, their gaming merchant relationships with PlayStation, Xbox, and others, and specialized compliance infrastructure within the company. They also have digital payment capabilities, and they have those solutions in over 14 languages. They support over 40 currencies. They allow for 260 alternative payment methods, and they are part of the eCash network. Another important strategic rationale for the acquisition of Paysafe are the growth and expansion opportunities. From a financial momentum point of view, the revenue growth over the last 12 months is $1.7 billion. They have EBITDA of $430.6 million. They have excellent geographic diversification, with 56% of their accounts in North America, 32% in Europe, 7% in Latin America, and 5% in the rest of the world. From a market position standpoint, they have 18 million active users, over 250,000 merchants, a strong global presence in over 120 countries, and an excellent regulatory compliance framework. Based on Paysafe's strategic assets, market position, and potential synergies, we recommend proceeding with the acquisition while carefully structuring the deal to address the company's debt levels and operational challenges. The supporting evidence for the acquisition is an established presence in high-growth verticals, strong regional diversification, complementary product offerings, and from a technology infrastructure point of view, modern API architecture, integrated risk management systems, and a scalable platform. The benefits of this, from a strategic point of view, are immediate leadership in iGaming, enhanced digital wallet capabilities, alternative payment methods, geographic. Despite the operational challenges and debt considerations, Paysafe's strategic assets and market position make it an attractive acquisition target for Visa. The combination would strengthen Visa's competitive position in digital payments while providing immediate access to high-growth verticals and complementary technology capabilities. This acquisition represents an opportunity to accelerate growth in strategic verticals, enhance digital payment capabilities, expand alternative payment offerings, strengthen global market presence, drive long-term value creation. The success of this acquisition will depend on careful integration planning, appropriate deal structuring, and effective execution of synergy opportunities.